It began with a sound, the echo of closing doors. One after another, the great halls of Wall Street went silent. Lehman Brothers, Bear Stearns, Washington Mutual, names that once stood as fortresses of finance, crumbled like sandcastles beneath the rising tide. In the autumn of 2008, the illusion of endless wealth shattered. Men in $1,000 suits walked out of glass towers carrying cardboard boxes filled with shattered dreams. Millions lost homes. Trillions vanished from markets. The world held its breath as banks collapsed, governments panicked, and fear became the only currency that held value. But behind the chaos was something far greater than greed. It was a system built to fail. A house of cards crafted from speculation, deception, and the blind belief that the good times would never end. We were told it was a once-in-a-lifetime crisis. We were told it would never happen again. But those who understood the machinery of money, the hidden levers of global finance, knew better. They knew the system had not been fixed. It had only been patched, repainted, and pushed to grow larger. And now, 15 years later, that same system trembles once again, heavier, riskier, and far more fragile than before. Chapter 1: The Recovery That Wasn't. The recovery was a mirage. After 2008, the world was promised a new dawn of stability. Banks were bailed out, central banks printed oceans of money, and governments spoke of reform. But in truth, the fire was never extinguished, it was merely covered with a layer of gold paint. Interest rates were slashed to near zero. Money became cheap, too cheap. The world borrowed its way out of crisis, believing debt could buy prosperity. Central banks, the Federal Reserve, the European Central Bank, the Bank of Japan, injected trillions into the bloodstream of global markets. But that money didn't rebuild factories or raise wages. It went somewhere else, into stocks, real estate, and the glittering world of financial speculation. Wall Street boomed again, while Main Street withered in silence. The rich became richer than ever before. The middle class became a shadow of what it once was. And the poor, they became invisible, their struggles buried under the noise of record-breaking stock indices. By 2013, the same banks that caused the collapse were bigger, more powerful, and more interconnected than before. Too big to fail had evolved into something worse, too powerful to challenge. The lessons of 2008 were forgotten. The greed, however, never was. Chapter 2: The New Bubble. Every empire needs a new story to believe in. After 2008, that story became technology. Silicon Valley replaced Wall Street as the new temple of wealth. Tech companies, fueled by venture capital and dreams of digital revolution, grew from garages to global giants. Investors, desperate for returns in a world of near-zero interest rates, poured money into anything that promised exponential growth. The logic of profit was replaced by the illusion of potential. Companies with no earnings, no assets, and no plans for profitability were valued in billions. Then came cryptocurrency, a new frontier of speculation. It promised freedom from banks and governments but quickly became a casino for the same financial elite who once gambled with subprime mortgages. Bitcoin, Ethereum, Dogecoin, their charts rose like rockets, fueled by greed, hope, and social media hype. Retail investors joined the frenzy, believing they were seizing control of their financial future. In truth, they were once again playing a game designed by those who always win: the institutions, hedge funds, and silent whales manipulating markets behind digital screens. And while everyone watched the flashing numbers of crypto exchanges and stock tickers, something even larger was happening: a silent explosion in global debt. Governments, corporations, and individuals all borrowed more than ever in history. By 2023, global debt had crossed $300 trillion, a number so large it defied comprehension. Every dollar borrowed was another brick added to a wall that could not stand forever. This wasn't recovery. It was denial, a global addiction to easy money. Chapter 3: The Global Domino. The world economy today is a single, massive web, woven tighter than ever. A tremor in one corner can bring the entire system crashing down. In 2008, the contagion began in America's housing market. Today, it can start anywhere, in the fragile real estate towers of China, the over-leveraged banks of Europe, or the debt-ridden government of the United States itself. China's property giants, once symbols of limitless growth, now struggle under mountains of unpaid loans. In Europe, energy crises and inflation expose cracks in economies that never truly healed from the last recession. And in America, the supposed stronghold of stability, the national debt has surpassed $35 trillion, growing faster than the GDP itself. Every government prints money to stay afloat. Every central bank manipulates interest rates to delay pain. Every nation borrows from tomorrow to survive today. It is not a recovery. It is a global juggling act, and the balls are beginning to fall. Chapter 4: The Illusion of Control. The architects of modern finance want us to believe they are in control, that the Federal Reserve, the IMF, and the World Bank hold the keys to stability. But what if control itself has become the illusion? When interest rates were near zero for a decade, they rewired the DNA of capitalism. Investors stopped fearing risk. Corporations stopped innovating, they borrowed instead. Governments stopped cutting waste, they printed more. Every decision made in the name of growth only delayed the reckoning. And when inflation finally returned, the beast they swore was dead, the illusion began to crack. From 2021 onward, the world faced a painful truth: printing money had consequences. Prices soared. Currencies weakened. The cost of living exploded. But central banks, addicted to their own power, could not turn back. They raised interest rates to fight inflation, and in doing so, they began to choke the very economies they had inflated. The medicine had become the poison. Chapter 5: The Storm Gathers. Every crash begins with whispers. The markets still smile. The experts still reassure. But beneath the surface, panic begins to bloom. That's where we are today. Debt is higher. Interest rates are rising. Consumer confidence is fading. And the world stands at the edge of another precipice, one that could make 2008 look like a tremor before the quake. Because unlike 2008, this time the crisis is everywhere: in housing, in stocks, in bonds, in currencies, in faith itself. Governments are broke. Banks are overexposed. Consumers are drowning. And no one, not even the most powerful institutions, can print real value out of thin air anymore. It never starts with chaos. It starts with doubt. A missed payment here, a failing company there. A few headlines buried in the business pages. Then, suddenly, it's everywhere. When one pillar falls in a global system built entirely on confidence, the collapse spreads like fire through dry grass. And today, that grass is the global debt market, the foundation of modern finance. Bonds, treasuries, corporate loans, all once seen as safe, now tremble under the weight of rising interest rates. When rates rise, debt becomes expensive. When debt becomes expensive, defaults begin. And when defaults begin, confidence, the invisible fuel that keeps the world economy running, disappears. In 2008, the crash was born in subprime mortgages. In the next one, it will come from every corner at once. Overvalued tech stocks. Corporate debt bubbles. Unsustainable government deficits. A real estate slowdown from New York to Shanghai. The world has built a skyscraper of prosperity on a foundation of debt. And now, the cracks are showing. Chapter 6: The Central Bank Dilemma. The most powerful people on earth are not presidents or generals. They are the men and women who decide the cost of money. The central bankers. They meet in quiet rooms, from Washington to Frankfurt to Tokyo, and decide the fate of nations. 4 years, they kept rates low, printing money to keep the illusion alive. Now, their own weapon has turned against them. Inflation, the monster they created, stalks the world again. To fight it, they must raise interest rates. But every rate hike pushes debt closer to implosion. It is a trap with no escape. Raise rates, and economies collapse. Lower them, and inflation devours the people's savings. This is not control. This is panic disguised as policy. In their pursuit of stability, they destroyed balance. They engineered a world where no one can afford failure, yet failure is inevitable. Every move they make now is a choice between two poisons. And the longer they hesitate, the stronger the storm becomes. Chapter 7: The Collapse of Faith. Money, in its purest form, is trust. A dollar has value only because we believe it does. But what happens when that belief begins to die? In times of crisis, people look for safety. In 2008, it was the US dollar. In 2020, it was tech and crypto. But in the next crash, there may be nowhere left to run. Because this time, it's not just the markets at risk, it's the system of belief itself. When citizens lose faith in their governments, when savers realize their money buys less each year, when investors understand that the system is rigged for the few, trust fractures. And when trust breaks, no amount of stimulus can rebuild it. We are entering a time when confidence itself will be the rarest currency on earth. The next crash won't just destroy wealth. It will destroy belief, in money, in institutions, and in the illusion of progress. Chapter 8: The Human Cost. In 2008, millions lost jobs. This time, it will be tens of millions. Automation has hollowed industries. Debt has consumed savings. And the safety nets, already stretched thin by years of political division and pandemic spending, are fraying. When the crash hits, it won't just hit Wall Street. It will hit every street. Families will see their mortgages rise beyond reach. Pensions will evaporate. Small businesses will crumble under the weight of tightening credit. Food, energy, and essentials, all will surge as currencies weaken. And once again, the same cycle will play out. The rich will be rescued. The poor will be blamed. And the middle class, that fragile bridge between wealth and poverty, will erode further into dust. Governments will promise reform. They will print, borrow, and spend in desperation. But each attempt to save the system will only deepen its collapse. This is not just an economic reckoning. It is a moral one. Chapter 9, The New World Order of Debt. Every crisis creates an opportunity for those who are prepared. As markets burn, a new architecture of power begins to form. Digital currencies. Centralized control. Global regulations disguised as protection. In the ashes of collapse, governments and elites will offer a new system. One where money becomes traceable, programmable, and controllable. A world where cash is obsolete, where every transaction is monitored, and where economic stability comes at the cost of financial freedom. They will call it reform. They will call it the future. But it will be control, hidden behind convenience. This is the silent ambition of every great crash, to reshape the system, not to fix it. To consolidate power in fewer hands. To erase the chaos they created, and replace it with order, their order. 2008 gave birth to endless debt. The next crash will give birth to a new financial reality, one where freedom itself is the rarest commodity. Chapter 10, The Pattern of History. History is not a line. It is a circle. Every civilization has its rise, and its reckoning. The Romans debased their currency until their empire collapsed. The British Empire drowned in debt after 2 world wars. And now, the global empire of credit, built by America, fueled by consumption, sustained by illusion, approaches its twilight. The signs are all the same. Excessive debt. Widening inequality. Corruption at the core. And a society that values speculation more than creation. We have seen this story before. And every time, it ends the same way, with collapse, chaos, and renewal. But renewal comes at a cost. The old order must fall for a new one to rise. Chapter 11, The Great Reckoning. When the dust settles, people will ask, how did this happen again? The answer will be simple, because we never learned. We believed debt could replace discipline. We believed printing money could replace production. We believed numbers on screens could replace real value. And for a time, it worked, until it didn't. The next market crash will not be a storm that passes. It will be a season that changes everything: how we live, trade, save, and dream. From the chaos, new systems will emerge, decentralized economies, alternative stores of value, and a new generation that demands transparency over profit. But before the dawn, there will be darkness. A darkness deeper than 2008. Because this time, the crash is not just financial. It is foundational. Epilogue, the warning we ignored. In 2008, we saw the world crumble and said, never again. But the same hands that built that house of cards rebuilt it, taller and thinner, on the same cracked foundation. And now, as the winds of inflation, debt, and greed gather once more, the tower sways. The warning signs are all around us: rising rates, failing banks, governments drowning in deficit, people drowning in despair. But the world looks away, comforted by denial and distraction. Yet truth has a way of returning, like gravity. And when it does, no policy, no bailout, no headline will be able to hold it back. The next crash will be worse than 2008, not because the numbers are bigger, but because this time, we built our entire civilization on the same fragile illusion. Money without value. Growth without substance. Confidence without truth. And when that illusion breaks, the world will remember what real value means. Not in charts or profits, but in people, in integrity, in the simple truth that no empire, not even the empire of money, can last forever.